Hello students, welcome back. This is Mrs. Mercado speaking. This is going to be a short lecture over Chapter 1, Introduction to Accounting. And this is for my Accounting 1303, Introduction to Accounting 1 course. The textbook that we are using is College Accounting 23rd edition, chapters 1 through 15, Hines and Perry. Okay, so what's going to happen is I'm going to explain to you how my lectures are going to be working. This is the first lecture that I'm going to be recording. Now, this lecture is going to be very short because Chapter 1 really does not cover any problem solving. It's just basic terminology. It's a very short chapter. You can read it in less than 30 minutes. It's just basic terminology. It's introducing to you the concept of accounting. Okay, so there's really nothing that I'm going to be able to show you or calculate for you. My lectures are going to be more longer or in-depth once we start with Chapter 2. That's when we actually start doing problem solving. My lectures are not intended to provide you with an overview of the content of the chapter. That is the student's responsibility to read every chapter before they begin working on their assignments, okay? So, this is the first lecture. Before you listen to this lecture, you should have listened to the course orientation provided under the Start Here tab. Make sure that you have read and printed out your syllabus and you have that handy at all times. That way you know what assignments need to be completed for that specific week. Remember, I have very strict deadlines. The majority of your assignments will be available from Monday through Sunday. Sunday, the assignments are due at 11 p.m. This goes for the majority of your homework and quizzes, okay? There are some assignments that are due in a shorter time span, whether it be a project or a test, and everything is outlined in your syllabus. You need to go back and refer to your syllabus. If there are any changes to the due dates of any of your assignments, they are outlined in the syllabus. So having the syllabus handy is super, super important. So what's going to happen is every week I'm going to go live. I'm going to go and record these lectures for you. And I'm going to explain a couple of the problems that you're going to be seeing for homework. Okay? I'm not going to go through all of the problems. I'm going to go through several of them. But if you have any questions about any of the problems that I don't cover, feel free to contact me and I'm here to help you and assist you in whatever I can. Okay? Don't think that because this is an online class, this is you're on your own. I'm here to provide you any necessary support you need to be able to learn the content, okay, or clarify any questions you might have. That's what's going to run every week, okay? So every week you're going to go log into Blackboard and you're going to see a video posted related to the chapter that we are covering. This week, like I said, it's Chapter 1. It's just a general introduction. I'm just going to quickly just do a short overview of the chapter. You still need to read it, okay? There is a lot of information that you have to go out there and read, and then you complete your Chapter 1 homework assignment and your Chapter 1 quiz, okay? So let's get started. So this chapter introduces the accounting process. It basically goes over the 6 steps in the accounting process, okay? So the first step in the accounting process is analyzing, okay? In accounting, we do a lot of analysis, okay? There's a lot of transactions that happen. We need to be able to sit down, analyze, and identify what is going on in that transaction. Okay, so analyzing is basically just looking at a series of events that have occurred and thinking about how they affect the business, okay? So if I go out there and I buy a car, okay, with cash, how does that affect my business? Well, my cash is going to decrease because I had to take money out of the bank to buy the car. But guess what? Now I own a car, okay? So you have 2 types of assets being affected. An asset is basically anything that you own. So you have cash on one hand side and you have a car on the other. So cash is decreasing while the car is increasing. So you're using cash to buy a car. And we'll go over that in Chapter 2. But basically, analyzing is just understanding what is happening, okay? What is going on in this particular transaction, okay? So the first step in the accounting process usually occurs when the business receives some type of information. That can be a bill, an invoice, that can be any type of record, a deed of trust, anything that we receive that shows some kind of transaction. Okay, so the first step involves deciding if the piece of information needs to result in an accounting entry or not. Okay, are they just providing you with information? Okay, Let's say, for example, you're paying your utility bill. Okay, you have CP&L company, and they send you a letter, and they say, you know what? We're informing you that our office has relocated from Edinburgh to McAllen. Okay, they're just letting you know of information that their company has changed. Okay, but along with that, you also get a bill. Okay, and the bill says, CPL says, okay, you owe $380 for your electricity bill. What am I going to do with that? Well, that is something that you need to take care of. You need to pay that electricity bill, because if you don't pay it, your power is going to be shut off. Okay, so you need to identify all of the documentation, all of the information you receive, and determine, is this something that I need to record in my books, or is this just something informational that I need to keep aside in case I need it for further reference or for contact information, things of that nature. Okay, the next thing we have is recording. Recording is super important because it's the entering of actual financial information about specific accounting events into our accounting system. Okay, so this is going to be updating or impacting our accounting records. Okay, although this can be done with paper and pencil, and that's old school. Okay, nowadays most businesses use computers to perform routine record keeping operations. Okay, and a lot of businesses use small businesses use QuickBooks. Okay, if you're majoring in accounting, you will be having 1 or 2 QuickBooks classes, which are super important and fun. But a lot of bigger businesses. I used to work for a $2.3 billion bank, and we had our own accounting system. Okay, it was more, built to what we needed. It was not out of the box, kind of a thing that we were using. But it's still an accounting system. It's electronic. Everything was being recorded on a computer. It was being updated continuously. So, having a system where we record and update all of our financial information is super important, so we can have up-to-date information. Okay. Next, we have classifying. This is the sorting and grouping of similar items together, rather than merely keeping a simple diary-like record of numerous events. So you have to classify the transactions as to what kind of an account or what kind of a transaction this is. Okay, and we'll be able to experience all of this hands-on chapter 2. Okay, so this is just laying the ground for you so you can start understanding, okay, well, I need to analyze a transaction, I need to record it, I need to classify it. Is this an asset, a liability, or stockholders' equity? Is this a revenue, or this is an expense account? Is this affecting my stock? Is this affecting my liabilities, my assets? What is this affecting? So you have to classify your transactions into groups. Okay, and then we have summarizing. Okay, summarizing is basically the aggregation of many similar events to provide information that is easy to understand. So here, for example, they say a firm may buy and sell baseballs during the year. Summarizing provides information on the total baseballs bought and sold and the change in the number of baseballs held from the beginning to the end of a period. So summarizing is a way of aggregating information, making it simpler to understand for our users. Whoever is looking at that report, they don't want to just look at a list of things. They want to be able to quantify it, do analysis, perform more in-depth understanding of what's going on with the operations of the business. So summarizing is a good way to put information together, aggregate it, and then be able to make decisions using that information. Okay. Then we have reporting. Reporting is we tell the results. What happened for a specific point, for a period, or whatever the case might be. Okay. In accounting, it is very common to use tables and numbers to report results. Okay. We also have a variety of reports that are produced within accounting, such as our income statement, statement of owner's equity, our balance sheet, our statement of cash flows. We have a lot of reports that are prepared to be able to display all of the information and identify the transactions that occurred during a specific period of time. Okay, and then we have interpreting. Okay, so interpreting is deciding the meaning and the importance of the information in various reports. So now you have a report in front of you. What does it mean? Okay, what's happening here? Okay, I used to work in a bank, and my responsibilities included not only preparing the reports, not only doing all of these analyzing, recording, classifying, summarizing, and reporting, but also interpreting. Okay, so let's say, for example, I was looking at utility bills. Okay, I look at my utilities bills and I look at for the last 6 months, and I noticed that this month my utilities increased by 20% from the prior months. Okay. Well, I'm going to report that on my report. I'm going to say, okay, utilities increased, but why did they increase? You don't only have to report it, you have to understand why things are happening. Why did your utilities increase? Okay. Maybe you had a contract and your rates were lower. Now, you're negotiating a contract and this month you couldn't get it through. So now your rates are higher, causing that increase. You need to figure out what's going on. I remember my supervisor, the one that I used to work for, he would have me call. We had, I worked for a bank and we had like over 30 branches. And if the water bill would go up significantly, they would call, he would have me call and ask, do you have a leak in the toilet? Why is are your sprinklers coming in or turning on at a specific time? Are they, broken, or what is causing that the water bill is higher significantly this month from prior month? We had to get to the root of the problem. Call the branch. You need to go check your toilets. You need to go check your sinks. You need to go check outside in the lawn. Is there a leak somewhere? We need to figure out what is causing. If you're not doing anything different this month from last month, why is your water bill double? Okay? So you need to be able to get a report, look at it. Something pops up at you, you need to be able to go back in there and investigate and identify and interpret the meaning of that information on those reports. Okay. A lot of racial analysis is performed, comparison from month to month, year over year, maybe company to company. Maybe you want to compare yourself against your competitors to see how your ratios are in comparison to them, to see how your operations are doing against your competitors. There's just so many things that are going on that we are going to be going over slowly as we progress through the chapters. Okay. But this chapter basically lays out the accounting process, which includes analyzing, recording, classifying, summarizing, reporting, and interpreting. Okay. The chapter also goes over Gaap. I'm not going to cover all of the details. Just know that after the stock market crash of 1929, the government had to establish or they established the SEC, which is the Securities and Exchange Commission, whose purpose is basically to develop standards for reporting financial information to stockholders. Okay, so the stock market crashed, information was not being reported accurately. So then the SEC stepped up and said, you know what, we need to do something about it. So they went ahead and in 1973, they identified the Financial Accounting Standards Board, which is FASB, and they went ahead and they gave the role to FASB to be able to develop all of these standards that needed to be developed and followed by organizations and companies to safeguard the well-being of investors. Okay, so some quick facts about Gaap. Gaap stands for Generally Accepted Accounting Principles. Gaap is utilized in the United States. Okay, a lot of other companies or a lot of other countries, let me rephrase that, a lot of other countries in the world use other accounting standards or methods. A lot of them use International Financial Reporting Standards, IFRS. A lot of countries use that. We, the United States, have kept or implemented Gaap because we feel that Gaap was very well developed. It's strong. It provides clear guidance to how to prepare financial statements and how to present all of this information to our stockholders. So that is what we use here in the United States. Okay, we use Generally Accepted Accounting Principle. And basically what it is, it's a whole list of accounting rules that companies must follow when creating financial statements. Okay, and these rules are developed by the Financial Accounting Standards Board, which is FASB. Okay, and any company that is publicly traded or companies that provide financial statements to people outside of their business must follow Gaap. Okay, so it's just a rule book of, okay, if you have this scenario, this is what you need to do. Okay, this is how you need to report it. Okay, very clear and precise guidelines. Now, the reason we have not converted to International Financial Reporting Standards, IFRS, is because a lot of the people that support Gaap say that our rules under Gaap are more clear and are more black and white kind of a thing, more easy identifiable and more easy to follow, and there's less room for interpretation than if we were to use international financial reporting standards, which allows more flexibility and more decisions based on how you interpret the specific guidelines. So Gaap is what we've been using, and Gaap is what we will continue to use until the government decides otherwise. Okay? So make sure that you read that section over. There's a lot of important information dealing with Gaap on your textbook. The textbook also provides you with the types of ownership structures and some of the disadvantages and advantages of each. Okay, so we have 3 types of ownership structures. We have a sole proprietorship, a partnership, and a corporation. Okay, so sole proprietorship is basically any company or any business that is owned by one owner. That one owner assumes all of the risk, and that owner makes all of the decisions. Okay, so it's just sole proprietorship, one owner, and that owner has 100% of the risk and 100% of the decision making. A partnership is when you have 2 or more partners that make up the business. Okay, that's a partnership. Okay, now along with having a group of people come together to form that partnership, you have to share risks. Okay, so depending on maybe the amount of investment, maybe I own 20% of the company, you owe 30, someone else owes 40, and the other one owes 10. Whatever the structure it is maybe how you're going to be making the decisions within the company. So there's a sense of collaboration from each other. You have to, get together, discuss what's going on, what decision you want to make, and make a decision, because you are sharing on the risks of those decisions. Okay, something goes bad, it's not my problem, it's all of our problems, because we all made a decision, and that was a unanimous decision, and that is what we ran with. Okay, a lot of a disadvantage to that is sometimes you butt heads with other people. Okay, you don't agree with them. It's time consuming to make a decision, because we have different views, different opinions, we have maybe different ways of thinking, so it just becomes a little bit more complicated and challenging. It's very important that when you do establish a partnership, you trust that other person or persons that you're establishing your partnership with, because it will affect your share of the ownership in the company. If something goes wrong, then you're going to be affected, because you're part of that partnership. So a partnership is just having 2 or more partners come together to form that business. Okay, a corporation is basically owned by stockholders. Stock is issued out, and they're sold in the public. Anybody can buy stock. Okay, so depending on the number of shares of stock that you have is your ownership interest in the corporation. Stockholders usually have limited risk. They're limited to the amount of their investment. So whatever they invested into the company is what basically the maximum they can lose. Okay, and stockholders may have very little influence on business decisions. Stockholders, they're not the ones making the decisions. Corporations usually have a board of directors, that are provided information by the different management, different executives, that they make the decisions for the company. Okay, so on a sole proprietorship and a partnership, your personal assets may be put at risk. Whereas a corporation, you are limited only to the amount of your investment into that company. Okay, so there's a lot of information in your textbook about the 3 different types of ownership structures. You also have different types of business organizations by activities. Okay, so we have 3 types of businesses organized by activities. The first one we have is a service. The second one we have is merchandising, and the third one we have is a manufacturing. Okay, so I've had the pleasure of working in all 3 types of business by activities. Okay, a service business. Here they have the example of a travel agency, a computer consultant, a physician. What do? They provide a service. You go to the doctor, you pay your $100, so you can see a doctor. They check you, they figure out what's wrong with you, they give you a prescription, and there you go out the door. Okay, so they provide you with a service to try to make you feel better. Same thing if you work at a bank. I used to work at a bank, several banks. You go in there and you say, well, I need a checking account, I need a CD, I'm looking for a loan. Okay, I'm looking to make an investment. They provide you a service. Okay. Now merchandising. Merchandising can be a department store, a pharmacy, a grocery store. In a merchandising kind of a business, you have different products from a whole bunch of companies, and they fill your shelves, and then the consumer goes in there and purchases these items from the store. This could be a Walmart, this could be a Target, this could be a Walgreens. Okay, they have merchandise from a whole bunch of different vendors, fill their shelves, and then you just go and purchase it from them. Okay. When I started, when I was 18, I started working at HEB. I used to love it. I worked there for a couple of years in different departments. I was a cashier. I was a CSA. I did the bakery. I did the deli. I did the meat market. I did the department where we would. I remember we would just walk around and make sure nobody was stealing. I don't know what it's called nowadays. But I worked in different areas of HEB. And I really enjoyed it. And you really learn how the operations of a merchandising company works. You know, it's just amazing how they keep track of their inventory, of their different vendors, of everything. Very, very amazing kind of a thing. Okay, and then we move on to manufacturing. Okay, I used to work for a maquiladora in Reynosa. Okay, there we would manufacture auto parts. Okay, so when you make something, you know, you make furniture, you make a car, you make toys, you make whatever electronics, whatever is it that you're making, you're manufacturing it. You're making them from raw materials. Then you're a manufacturing company. Okay. So those are the different types of businesses organized by activity. So you need to be able to identify, okay, this is, I go and I took my car to get washed. Okay. What kind of a business is that? Well, they are providing me with a service. They're washing my car. Okay. So I leave my car and they wash it for me. That's a service. Okay. Okay. So now I'm going to open up a candy store. I go and I buy a whole bunch of candy in Mexico. I bring it and piñatas, and I open up a business. Okay. Did I make all of those candy and those piñatas? No, I bought them from somewhere else. I put them in my store and I'm reselling them. That's merchandising. Okay. Okay. Manufacturing. Okay. You know what? I came up with this wonderful cough medicine or a cough solution. You know, nowadays, you know, I mix a whole bunch of products, raw organic materials, you know, and I created this formula that helps you with your cough. I'm manufacturing this cough medicine, okay, or this cough syrup or whatever the case may be. I'm making something by getting raw materials and putting it together. Okay, I'm manufacturing a brand new product. Okay, so I had to get raw materials, mix them together, bottle it up, label it, and then sell it. Okay, I'm manufacturing something. Okay, so that's manufacturing. Okay, you need to be able to identify the different types of businesses by activities. Okay, now last but not least, if you're taking my class, it's either because you love accounting, which I hope you do, because I love accounting. I love doing accounting. I love teaching accounting. I just think that accounting exposes us to so much information. If you know accounting, you can basically become a manager. You can basically do it all in a business because accountants are the gatekeepers of information. Okay, they know what's going on in the business. Okay. When I used to work at a bank, I would go to all of these important meetings because I was the head of the accounts payable department for a period of time. So all of the bills that the organization had paid came through me. Okay, all of the contracts came through me or our department. You know, so I knew everything that was happening even before it happened. Okay, so if they were implementing or if they were gonna surprise the employees with a bonus, I knew that was happening because, you know, I had that information. So, you know, I loved working there because I knew everything that was happening in the organization. Okay. Because I was processing, I was responsible for overseeing the people that process all of these invoices and payments and contracts. I had to review them. I had to authorize them. I had to approve them. I had to prepare a whole bunch of reports. I knew exactly what was going on. Okay. Now the CFO didn't have time for that because he was very busy doing other things. So instead of him, you know, filling his head with information, he would just carry me with him, and I would go to these meetings, and if they had a question, well, why did this happen? Well, I knew what had happened. Okay, so accounting to me is fascinating, and I hope that you're taking this course because you are majoring in accounting, or you are interested maybe in opening up your own business. Okay, even if you're not going to do the accounting for yourself, you're going to hire an accountant. It is very important that you understand how to read financial statements, have a basic knowledge and understanding of accounting in general, because you don't want your accountants to start embezzling money or stealing from you or not doing things correctly. You want to be able to check their work, understand what's going on, and if anything, if you identify any red flags, you can bring it up. Okay, so accounting is just marvelous. Now, there is an expected demand in the accounting profession between the years 2016 and 2026. So we are going to be seeing a growth in accountants and auditors of 10%. Okay, budget analyst of 6.5%. Now there's a slight decrease in bookkeeping, accounting, and auditing clerks. This is more of the lower level accounting positions. There's a slight decrease. And then we have billing and posting clerks and machine operators having an increase of 14.1%. So accounting is never going to go away. Okay, every business needs an accountant to be able to prepare their financial statements, report all of this information, enter it into their system, analyze it, pay taxes, do audits, everything. Okay, every single company needs accountants. Okay, so it is a job. It's a very secure job, and it's a job that is available down here. Most of my students are from the Rio Grande Valley. I do have some international students or some students from other parts of the United States, but most of us live in the Rio Grande Valley, and there is a demand. You can work in, a manufacturing company, a service company, any kind of business needs an accounting. Okay, so there's different career pathways to accounting. You can do public accounting, you can do auditing, taxation, or management advisory services. You can do private accounting, doing accounting information systems, financial accounting, cost accounting, budgeting, tax accounting, and internal auditing. And then there's governmental and not-for-profit accounting. If you're working for a not-for-profit organization, maybe you're working for the Red Cross, or what is that other, United Way, anything of that nature. They're not-for-profit. If you're working for a city, a municipality, you can do governmental accounting. There's just so many different pathways that you can take in accounting. Okay, or if you're wanting to open up your own business, accounting is fabulous because it will allow you to understand, how to make business decisions. Okay, so chapter 1 is very just basic information about accounting. No problem solving. The problem solving will begin in chapter 2. So if you complete chapter 1 this week and you want to start reading over chapter 2, that would be fabulous. Get a little head start. But chapter 2 does begin to introduce the concepts of accounting, debits and credits, the accounting equation, stuff of that nature. The chapters in this textbook are not very long. The content is very easy to understand. There's a lot of examples provided. But you cannot succeed in this class unless you read and you put in the time and the effort. Please make sure that you read, you review your PowerPoints, you listen to the lectures, you complete your quiz, and you complete your homework. Okay, manage your time wisely. Okay, so that is basically it for chapter 1. I want to all wish you a great week, and until next time, stay safe.